Well, good morning. I'm Jagender Rana. The topic for our discussion today is Postal Life Insurance. Postal Life Insurance. Indian Post, established in 1855, is now in its 155 and above year of operation. It has competitive edge in terms of broad outreach in the country with over 1,55,000 post offices, with the bulk of them 85% located in the rural areas, and its strong brand recognition. You can say it is now running in 170 year of operations. So Postal Life Insurance Scheme introduced in February 1884. Postal Life Insurance Scheme introduced in February 1884 as a welfare measure of postal employees only. A scheme further extended to employees of central and state government employees. With the passage of time, the coverage was extended to all public sector undertakings, financial education institutions, local and autonomous bodies. In 1995, the scheme was extended to rural people with limited financial coverage under Rural PLI scheme, and also extended to the children of the insured person under PLI. So, what are the available plans under Postal Life Insurance that has to be understood now? Say the first one is Santosh Endowment Assurance. This is for the age group of 19 to 55 years. Maximum sum assured is rupees 10 lakh. Another one is Suraksha Whole Life Assurance. This is for the age group of 19 to 55 years and maximum sum assured is rupees 10 lakh. Suvidha, the convertible whole life assurance. For the age group of 19 to 55 years, maximum sum assured is rupees 10 lakhs. Then Sumangal, anticipated endowment assurance money back. For age group 19 to 45 years, policy period 15 to 20 years, money back starts at 6th, 9th, 12th and 15th years in respect of 15 year. Policy end at 8, 12, 16 and 20 years. Yugal Suraksha, joint insurance of spouses. For age group 21 to 45 years, minimum age determines eligibility. Means age determines the eligibility. Maximum insured amount is rupees 5 lakh. One of the spouses should be eligible for insurance. Children policy. Parents insured under PLI are eligible to take this policy for their children. Children should be in between 5 to 10 years. Sum assured is rupees 10,000, that is 1 lakh for further subject to insured amount of the parents, whichever is less, and policy is further limited to one policy and up to a maximum of 2 children. Now available plans under rural PLI. Gram Santosh, that is endowment assurance. This is for the age group of 19 to 55 years. Maximum sum assured is rupees 1 lakh only. Gram Suraksha Whole Life Assurance. Again for age group of 19 to 55 years and maximum sum assured is rupees 1 lakh. Gram Suvidha, that is convertible whole life assurance. For age group 19 to 55 years, maximum sum assured is rupees 1 lakh. Then Gram Sumangal, anticipated endowment assurance money back. For age group 19 to 40 years, policy period 15 to 20 years, money back starts at 6th, 9th, 12th and 15th years in respect of 15 year and policy 15 years policy and 8, 12, 16 and 12, 20 and 20 years policy. Then Grand Prix anticipated endowment assurance for 10 years. So for age group 19 to 45 years means age determines eligibility. Maximum insured amount is rupees 1 lakh. Money back starts at 4th, 7th and 10 years. All rural PLI policies can be taken for a minimum of rupees 10,000 and maximum 1 lakh. Now salient features of PLI schemes. Deduction of premium from salary. Payment of premium through cash or check. Uniform rate of premium in respect of sex and occupation. Maximum sum insured is rupees 10 lakh. No medical examination up to sum assured of rupees 25,000. Nomination and its variation facilities. Loan on easy terms after specified period. Surrender facility after 3 years. Revival of void policy subject to fulfillment of certain conditions. Claim case without nomination is settled in favor of the legal heir. Transfer facility from one postal circle to another. Rebate admissible on advance premium deposits for 12 months 2% or 6 months 1%. Now qualifies for income tax under section 80C in respect of premium paid. Higher bonus, low premium, endowment 77 per thousand, whole life rupees 95 per thousand. Investment coverage plus high investment return. For example, if an endowment policy for rupees 1 lakh is taken at the age of 35 for 5 years, monthly premium will be rupees 1,720 per month and total premium paid comes to rupees 1,03,200 and return would be rupees 1,38,500 plus risk covered. Whereas recurring deposit account in PO fetches in total amount of rupees 12,45,000, 1,24,510. The risk starts from the date of acceptance of proposal. Now how policy can be obtained? Filling a prescribed proposal form by proponent through authorized field force. Authorized field force comprises of development officers PLI, field officers PLI, head postmasters, senior superintendent of post offices, PLI nominated agents, Gramin Dak Sevak, assistant superintendent, inspector post, public relation inspectors, postmen, customer care centers of PLI divisions. So in view of likely future competition, PLI has redefined its functioning with regard to policy documentation, grievance, redressal, claim settlement, servicing of policies, fund planning and its investment not only to stay in market but to establish it as a market leader. Now, existing performance of PLI, business potentials in PLI. Eligible category coverage is still largely untapped. Eligible category is still unaware of benefits and kinds of policies offered by PLI. Large scope of utilization of available network. A good investment opportunity for the proponent plus risk coverage. Bottlenecks of the system is that non-utilization of the total workforce, since all grassroots level post offices like SPM or BPM are not authorized to propagate and do PLI business. Then lack of knowledge of PLI to explain the benefits to eligible prospect customers. Poor after sales service, staff unaware and unwilling to accept PLI business premium. Lack of adequate stationery and information system for customers. Lack of publicity and advertisements due to non-provisioning of adequate funds. Non-existence of incentives for all categories of officials. Incentives only admissible to DO and FRAFO PLI. Documentation process of rural PLI much complicated. So suggestions for sizable growth of PLI. All grassroots level postmasters need to be made nodal officers for propagating, accepting and after sales service. Wide publicity through print and visual media explaining comparative benefits. Adequate training to workforce. Provision of incentives to each category of official involved after fixing some threshold. Sufficient provisioning of stationery and other publicity and information material for customers. Upgradation of technological uses for online information for the customers in respect of their policies. As far as future PLI is concerned, PLI under the existing scenario carries the capability to grow at 20 to 30% increase each year, as is evident from its growth to the tune of 7,678 crore in PLI and core business. So the liberalization of insurance sector and domain of Insurance Regulatory and Development Authority, PLI and RPLI have to come under its regulations and consequently it has to compete with other insurance companies in the open market and thereby the level of play will also increase. Consequent upon coming under IRDA, PLI is expected to compete with the major players like Bajaj Allianz, ING Bias, AMP Summer is over, SPI Life, Tata IGS, DFC, Standard, etc. So in view of likely future competition, PLI has to redefine its functioning with regard to policy documentation, grievance redressal, claim settlement, servicing of policies, fund planning and its investments, not only to stay in market but to establish it as a market leader. So as reliably learned, it has been decided in principle with the mutual consultation in between DOP and MOF to switch over to the new area under guidelines of IRDA. So the entire fund of POIF and RPOIF is likely to be freezing with MOF with interest accruable at the rate of PPF. So to kickstart a new area, some funds will be placed at the disposal of the PLI to work as independent insurance company. So with this background, we need to prepare ourselves to restructure the entire business enterprises in such a manner that PLI and RPLI will always be expanding in business-like manner. Let us show that there is great potential in the open market and we can ensure proper growth and add substantial revenue to the department. Thank you very much.